Well, markets are still slightly on the weaker side, but small and mid caps are trading off lows. A lot of green energy stocks have rebound, so it's not all that bad. Almost 80-90 point rebound from the day's low have actually happened. Abhay Agarwal is now joining us to talk more about markets. Of course, the founder and CIO at Piper Serica. Abhay, you've seen many election-led volatility, nervousness, something which is going on in the market right now. But you are actually recommending your clients the best strategy is to walk through this volatility, staying fully invested, isn't it?
Yes, good morning, Ajay. Absolutely right, Ajay. I have seen that these kind of volatile environments are the best friends of long-term investors because this is a time that you get, very good opportunities to buy high-quality stocks at reasonable valuations. So I don't think this is a market that people who are looking to bottom fish or bargain hint is should be looking at it. I think this is a market where once the event is over, people will refocus on earnings, refocus on growth, refocus on India's long-term economic potential and the resultant expansion in market cap due to that, and which companies will benefit the most. So I think the whole conversation will change into that direction. So I think the investors should look beyond just this June 4th date and look at where are the investment opportunities for the next 5 years, and focus on that rather than getting too distracted by just one day outcome.
Right. Abhay, there's a very interesting, let me put a caveat. Of course, all the stocks which we will be discussing here with you are only for indicative purposes. But I see that Grasim is something which you like now. And what is happening is that, of course, they have entered the paint segment, and I have seen Mr. Birla after a very long time give guidance on 10,000 crore revenue and profitability from this business in 3 years. Then jewelry launch, something which is making Titan nervous. What is your hypothesis? Cement, of course, capacity addition is fine, but the cement prices have not gone up in 10 years. I was looking at the data. What is your hypothesis of Grasim?
Yeah, I think Neeraj, Ajay, what we are looking at in case of Grasim very clearly is that it is an amalgam of businesses which are very good businesses, but for some reason the market hasn't appreciated those reasons for a bit of time. But now these businesses are coming together in a way that there is a very strong top management drive led by the founders of the group to make all these businesses work. So I think as a group we expect that Birla Group will re-rate because of various things that they are doing in the group. Like you read about Novelis IPO, which was pending for a long time. It happened finally, or it is in the process of happening finally, which will unlock capital for Hindalco. Similarly, we expect Grasim to similar cycle. On cement per se, Ajay, as you had tweeted today, I think about the excitement around a 10% expansion in the infrastructure capex spending plan by the government. And that is, it may 10% may sound 10%, but in rupee terms, it's a very large amount. And once those capex projects get going, the demand for cement is going to rise, and the industry is highly consolidated. So as you said, for 10 years the prices haven't risen, and that is so true. And I think that's one of the reasons that these cement companies, while they promise to be the next big multi-baggers, they do not. But I think going by that demand and the consolidated industry nature, it may take off. So that is the reason that we have added Grasim. We see it as a underpriced large cap opportunity that we are happy to hold for, with a 3 to 5 year perspective.
Another interesting point which you make is return for insurance. Now, insurance stocks have not made money for investors for longest of years. Uh, some case or the other, some issue or the other. Star Health and iPro is what you've added. Star is the dada of its own space, health insurance space, but still not done much. What is your hypothesis here?
Two things. One is that the demand is very, very solid, and the proof of the pudding is even LIC is now looking to enter this space, and they're welcome to, because still we have you know, the whole healthcare business in India, healthcare insurance can become 40, 50 times its size. That's how big the market is. Most of the players like Star have limited themselves to agent-led business generation, which is currently the model, but it will change. More digitization will come into play, which is already coming in through some startups that we are seeing. So one is that the whole market opportunity being so wide and increasing. The second is that the government policies towards healthcare insurance are contradictory to what the government wants to do. So, for instance, it's very difficult to understand why is there an 18% GST on health insurance policy when the government, on the other hand, says that it wants to provide protection for health. Insurance is important. So I think some GST rationalization will take place in healthcare insurance, in insurance overall, which will further make it easier and cheaper for people to get insured or buy insurance policies. And the third is that as the healthcare costs keep going up, Ajay, we're seeing it, and it's not only limited to the richer segment, it's also to the lower segment, which is not fully covered by Ayushman Bharat scheme and the other government schemes. I think it's fait accompli that large players like Star Health with a 33% market share in standalone health insurance will benefit more. Stock has underperformed, I think, more for technical reasons. We saw some exit by existing private equity fund investors coming up. So I think it's giving a good opportunity to, again, long-term investors to get into this space at a very juicy valuation when others are kind of, given up on this whole space.
Right. Hindalco is also something which you have added. I want to understand, there is also a special situation playing out there in the form of Novelis IPO, though we still don't have very clearly understanding of where that money will be utilized. Do you have any idea? And also, why have you added that one in your portfolio?
No, we see a secular turn in non-ferrous metals space, Ajay, so which is your aluminum, zinc, copper, lead, tin, nickel. And Hindalco, I think, is the best play in that space because of their large presence. And the group understands the commodity business, B2B business very well. They do it at a global level and they do it very, very well. One of the most efficient producers in the world. And they are expanding beyond aluminium into copper. They're bidding for copper mines. They are into silver. So what we believe is that with China reflation, I think China will surprise investors, investor community globally by the pickup in domestic demand. And what that will do is drive the non-ferrous prices, metal prices. They can almost double from here in next 2 to 3 years time. What that will do is provide bumper profits to the large efficient manufacturers that have become leaner in their cost using good technology, have acquired good assets. And Hindalco again is right up there in that space. And I think the money that they are going to raise from Novelis sale is probably going to go to bid for newer mines that they have already been in the process of bidding and to pay for them. So I think it's a good bet to have in the portfolio as a non-ferrous play. It will also make life difficult for the non-ferrous metal users like auto industry, infra companies, and all. But we'll have to see how they are able to pass on those costs to their customers.
Right. All right, Abhay, we'll let you go on that one. Thanks so much for joining us on the show today.
Okay.